Hello, I'm Lance Zimmerman with the CattleFax Closing Bell, brought to you by Zoetis. The National Restaurant Association released its February 2014 results for the Restaurant Performance Index. The monthly survey of U.S. restaurant operators was relatively neutral. The RPI value was at 100.5, with values above 100 signifying restaurant industry expansion. A deeper look at the index's components revealed mixed results. The index valued the current situation facing operators at 99.3, while expectations for the next 6 months were indexed at 101.7. The lower value, based on current market conditions, reflects the winter struggle being faced by restaurants. Industry reports suggest December to February weather was especially difficult for restaurants, with declining year-over-year same-store sales through much of that period. It is somewhat surprising that February performance was worse than a year ago, considering the perfect storm that created weaker restaurant business in early 2013. Extreme winter weather in major U.S. metropolitan areas was common in February 2013. Many consumers at that time were also feeling the influence of higher income taxes and the burden of U.S. government debates on the debt ceiling and budget sequestration. Relatively poor restaurant sales are not uncommon coming out of the winter, as weather discourages eating out, and consumer budgets are generally tighter after the holidays. Last year, restaurant operators were generally optimistic about the next 6 months, and it followed with stronger performance into May 2013. Restaurant business then chopped throughout the remainder of the year. A similar trend could follow this year, with warmer weather encouraging consumers to visit restaurants more frequently. However, operators may struggle to maintain comfortable margins with 2014's higher beef and pork costs. Frugal consumers will likely continue to look for value at the food service level, and that will favor fast casual restaurant business over other restaurant concepts this year. The fed cattle market was not established at recording time. Last week's fed cattle trade occurred at $148 per hundredweight on a live basis in the south, and the north sold mostly around $150. Feeder cattle values were steady to $3 higher for the week, and calf prices were unevenly steady. Demand remains relatively stout as summer grazers and feed yards are in steady competition for calves to fill empty pastures and pen space. Box beef prices moved lower again this week with relatively limited demand ahead of Easter, but prices are expected to improve as warmer weather signals grilling demand and the upcoming summer holidays. Corn prices declined this week as warmer weather forecast for the Midwest is expected to keep spring planting on schedule. Thanks for watching, and remember to visit CattleFax.com to become a member and receive the latest market news and analysis.
The beef business has never been for the faint of heart. The pressures are real, the risks are high, but the opportunities have never been greater. So how do you sort through it all to decide which way to go? For more than 40 years, CattleFax has led the way. Become a member at www.cattlefax.com. We're the time-proven leader in research, analysis, and information, equipped with the industry's most powerful database. Our team is impartial, objective, our vision is global, and our focus is you. CattleFax, the deciding factor.